Hi guys, so welcome to our series of 365 days, 365 concepts. Today we would be discussing the concept of capitalizing versus expensing. Let's first understand this with a very simple basic thought. Imagine a company purchases a machine, right? It purchases a machine at 20,000. Whenever we are purchasing a machinery, plant and equipment, land, we classify these items as an asset on the asset side of the balance sheet, right? In this T format balance sheet, we would classify this machine at the price at which we have purchased this, right? This is what we are going to do. On the other hand, if the company purchases stationery, right? It is purchasing stationery worth 10,000. We don't create an asset by the name of stationery. What is the reason? The simple reason rests on the fact that with the help of machinery, we would derive future economic benefit. The idea is that machine is going to serve me in the long run for 2, 3, 4, or for that matter, even 10 years. On the other hand, with stationery, our idea is that it would get exhausted, it would get utilized in the coming year itself. It would not go beyond that. So there is no prolonged benefit that I could extract when we are going to purchase stationery or spend cash on stationery. On the other hand, machine is likely to serve that purpose. So when we are classifying something as an asset, whenever we are spending money, a cash outflow is happening, and we are classifying that as an asset, we are capitalizing it. The act of creating an asset out of money spent is known as capitalizing. If we are straight away putting this 10,000 as an expense in the income statement, right? We are not creating an asset out of it. We are just expensing it, right? Putting it as an expense in the income statement. The act itself is known as expensing. So money spent, we created an asset out of it because the future economic benefit is going to get extracted from it in the long run. We are capitalizing something. On the other hand, if the future economic benefit is not there, it would get exhausted within the coming year itself. We are expensing that money spent, right? So let's understand this in more depth with the help of a few expenses that we do with respect to the machine itself, right? In relation to machine, whatever expenses that we incur, let's try and understand which ones to be capitalized and which ones to be expensed. Now imagine the cost of the machine that you are purchasing is 50,000. The cost of installing it and the cost of bringing that machinery to your factory. The machine supplier would use some transport and would send it to you and charge you for that as well. So installation, transportation, upgrade to increase machine efficiency, $8,000. All of these will get capitalized, right? The cost of the machine will get capitalized because it's straightforward. It is going to serve us in the long run. Installation and transport. The idea is all the costs that we are incurring to bring the machine to its position of use. Prior to use, we have not utilized or extracted anything out of that machine, which is going to be there in the long run. So prior to that, prior to bringing the machinery to its position of use, all the expenses are to be capitalized. All that has to be classified as an asset itself. Upgrade to increase efficiency, it is prolonging the life of the asset. We are trying to stretch the life of the asset so that we can extract more benefit from it. Hence, it is going to get capitalized, right? When it comes to routine maintenance, that's the difference between an upgrade and routine maintenance. Routine maintenance is just trying to fix the bugs in a machine, to bring it back to it, to bring the machinery back to its original utility capacity, right? That's why it is getting expensive because that will get exhausted very quickly. On the other hand, employee training, one might argue that it is going to serve us in the long run. It might not. The training that we are imparting to the employee, he might be inefficient, she might be inefficient. The training might not get imparted in the intended fashion. You train an employee, the employee might leave you the next day. There are a lot of uncertainties with respect to extracting that economic benefit. Hence, expenses like these get expensed. They are getting deducted from the profit and loss statement directly. We straight away charge it as an expense in the income statement. We don't capitalize it. Whenever we capitalize an asset, whenever money spent is classified as an asset, we depreciate that asset as well. So with respect to this, 63,000 is what is going to get capitalized if I add all these three. My machinery is sitting at a balance of 63,000 on the balance sheet. Let's assume that the machinery is going to be utilized for the next 10 years. That is its estimated useful life. What I will do is year by year, as I utilize the machine, it will basically reduce in value because I am extracting something out of it. So whatever utilization has happened each year, this depreciation, this is what is going to be classified as an expense each year. As the economic benefit is getting realized, I am charging that amount as an expense in the income statement. So expensing straight away to the income statement or profit and loss account. Capitalizing, you create an asset, you utilize it and pass it on in the form of depreciation in the income statement and not direct. That's the difference between the two. So I hope you enjoyed the concept of capitalizing versus expensing. See you on another day with another concept. Thank you.